All right, welcome back, fail-safe investors. I hope you all been having a great week in the stock market this week. We had a couple ups and downs. I hope you've been buying at the right moments. And I'm just going to say sit back and enjoy this video to come. Okay, so if you've been following my page, a couple days ago I did a stock analysis of the Coca Cola company, huge company, the world's leader in non-alcoholic beverages. They does everything when it comes to non-alcoholic beverages. They have all types of sodas, drinks, juice, coconut water, all of that. But enough about Coca Cola, and in today's video we're going to look at Pepsi, so a competitor to Coca Cola. But Pepsi might have a lot more going for it than you think. So with Pepsi, they are Coca-Cola's #1 competitor when it comes to beverages. They have a brand that everyone knows, or I would hope that everyone knows. I'm pretty sure everyone's seen the Pepsi brand. Red, white, and blue is pretty much the colors they go for. Pepsico is well diverse. So they operate out of two segments, food and beverage. So under the beverage division, they have brands like Pepsi the drink, or Gatorade, Tropicana, Aquafina, Gold Leaf Tea. They have a lot of brands to choose from when it comes to beverages. But when it comes to food, or their food division, they are even larger. So under their food division, they have brands like Frito-Lays, which under Frito-Lays, you have Frito-Lay chips, Dorito chips, Smart Food chips, Cheetos, Flamin' Hot Cheetos, Flame Rings. Pretty much if it's a bag of chips, PepsiCo probably makes it. So you might want to like turn your chips around and see if you see Frito-Lays at the bottom of it. You see Frito-Lays, that's PepsiCo. Pretty much all the chips that you might see in any vending machine or stores will probably come from PepsiCo. But they don't just have chips. So they have Quaker Oats, and under Quaker Oats they have like the oatmeal, granola bar, cereal. PepsiCo sells Captain Crunch. Did you know that before watching this video? I don't know if you did or not, but yeah, so Captain Crunch is also made by PepsiCo. They also sell or manufacture the Aunt Jemima pancake mix and syrup, which is the leading syrup sales right now in the United States. So PepsiCo is pretty much in either first or second place in two different fields. So like in snacks, well, chips, they're like first place, and then like in beverages, they're in like second place. So they have a huge position in these fields pretty much, and you got to look at that when you're looking into these type of companies. You got to make sure, like I said, the company is profitable. So I don't see Pepsi like losing or anything. Like Pepsi's so well diverse that even if they stop selling their beverage side, they will still be a profitable company just from their food side. And if you look into their numbers, the food side represents 54% of their total revenue, and then 46% comes from the beverage side of things. So they're pretty like split up nicely. But I should mention that, like I said, when you're looking into these companies, you have to look into everything. When I read their 10K, they have $29 billion in total or long-term debt. And the interest on that debt is $12 billion. Now, with long-term debt that's due 12 months or further out. So that's not bad for a company this size when they're bringing in like $67 billion in revenue. That's not bad, and they operate globally. But they do employ 116 employees in the United States and 267 employees globally. Now, some of their employees are seasonal, but a great portion of their employees are unionized. So I don't know what you know about unions, but when in times of economic slowdown, a union will fight to keep a position or keep a person paid at the same price or the same amount of money that they make right now, and they don't want to cut any hours with a union. So it's hard to pay your employees the same as you were paying them in good economic times when things slow down. So that's something that they're going to have to work through. I'm pretty sure they're good, and I'm pretty sure they set out to last a long time. I'm pretty sure PepsiCo has no problem lasting through multiple recessions with the global footprint that they have and brand recognition. Like, people love Pepsi. There's a lot of people I know personally that will love and prefer a Pepsi Cola over a Coca Cola, and not just Pepsi Cola. If you grab a bag of chips, 9 times out of 10, it's PepsiCo. I should also mention that Pepsi kind of have some of the same risk factors that Coca Cola had within like water shortages and stuff like that, but Pepsi also operate on a food and beverage side, so some of the ingredients that's used in their chips and snacks and other things like that, if the prices of those things go up, then that could affect them negatively. That is a risk that you have to consider. But when you look into the company and you see that they're bringing in a revenue of $67 billion and their cost of sales or the cost of doing business for them is $30 billion, it's like they're spending 50 cents to make a dollar back. And that's really good for any company. That's pretty much the goal you want to get when you're looking into a company. Let me give you some basic numbers about PepsiCo. So PepsiCo, ticker symbol PEP. The share price, last time I checked, is $138 a share. PepsiCo has a very large market cap of $182 billion. They have a price to earnings ratio of 25, which is pretty solid. Some people might consider that high, but you know that this company is going to be profitable because they made an earnings per share last year of $5.15 per share. So that's pretty good to have an earnings per share of 25 when you see what they're bringing back. And then a dividend yield of 2.9. So they do currently still pay a dividend. And that is good if you look for companies that pay out dividends, because not a lot of companies are still paying out dividends. And when it comes to dividends, you don't want anything too high, because you don't want a company that's paying out a lot of its profits in dividends. So when it comes to dividends, me personally, I don't like to look at anything that's over 5%. Like I think AT&T has a dividend yield of 7%, but AT&T is huge. It is a huge company. So when you look at the payout ratio or the percentage of profits that they're paying out for their dividend, I don't know what it is off the top of my head, but I'm just gonna guess it's not over 50%. I don't know, I'm just gonna guess. So I'll probably do another video on AT&T sooner or later, and we'll figure that out together. But the numbers for PepsiCo look pretty solid, especially for a company their size. It's like a solid company. All right, so you already know it's time for my favorite part, the balance sheet. So like I've already mentioned in this video, PepsiCo brought in a total revenue of $67 billion from last year. And from that $67 billion last year, they was able to keep $5.7 billion in cash and short-term investments, and with a little over $7 billion in loan receivables. So that's money that's yet to come, but it's supposed to come to them in this year. And $3.3 billion in inventories and cash from other places or other resources. They have a total current assets or assets that can be liquidated pretty much tomorrow if they wanted to, of $17.6 billion. So if they needed cash by tomorrow, they can have $17.6 billion in cash by tomorrow. But like I said, you always have to weigh out the current assets against the total current liabilities in debt, which is everything that's due within these next 12 months. And when you look at the total current liabilities in debt, it's $20 billion. So yeah, look at it. Which one is the bigger number? You have $20 billion due in this next 12 months. You have $17 billion or $17.6 billion that you're gonna make or can make in these next 12 months. But a company like PepsiCo is so huge and so globally known and brand recognition and considered stable that they can issue just more bonds and raise that capital like that pretty much. So like, when you have a history like PepsiCo and Coca Cola and Apple and like all these other companies, if you like known to be a good, profitable company, you can raise capital or debt like that. They can just issue bonds, people will buy them up, banks will give them loans, and they'll be good. They can get a loan from the government. Like I said, you can't just look at the total current assets and liabilities, you have to look at the big picture. So their total assets, which is like if they had to liquidate the whole entire company, would be $78 billion. That's not bad, but like I said, you have to look at the total liabilities, $63.6 billion. So when you look at the big picture, they're not in the bad standing. Like you have to look at it like if this business shut down right now everywhere, would they be able to pay off their bills and still have money left over? That's how you have to look at it. So in the case of PepsiCo, I will say yes, but this company operates on so many levels in so many places around the world and is well diversified in its own portfolio with between food and beverages, like huge. They are competing on both fronts.
They're competing on both fronts.
And they're pretty much winning. Not on both. Like Coca Cola's beating them on the beverage front, but they have them on the food side. Like when it comes to chips, PepsiCo is everywhere. But anyway, moving on, let's go to the income statement. Now, for the sake of the income statement, I do usually personally look into other things on the income statement when I'm looking for myself. But just for the sake of time, I'm just going to give you the total operating income or the revenue, which in PepsiCo case was $67 billion, and then the net income, which is what they took away after they paid taxes and everything on that money. So in the case of PepsiCo, they had a total revenue of $67 billion, and they had a net income of $7 billion. So that's really good what you take away from $67 billion after you've paid off all your bills, taxes, you know, your property plants and all of that. And they own a lot of their property plants also around the world. So that's also should be mentioned. For the final financial statement, we're going to look at the cash flow statement. So like I've mentioned before, for the cash flow statement, we like to just get the free cash flow, which is pretty much the profits that they're taking home. So in the case of PepsiCo, when you have a net income of 7.3 and a capital expenditures of 4.2, you have a free cash flow of 3.1. So they do have profit, but I should mention when it comes to that dividend, from that 3.1, they're paying 74% of those profits back into the dividend. So they're not leaving too much room to reinvest into other things. But when you like PepsiCo, you pretty much have a solid footprint where you are. That's just my opinion. I could be wrong. And I really would prefer if you do leave some comments below. We can get some comment and we get some topics going on these. But that's just my opinion. So, like I said, and like I always say, disclaimer, I am not a financial advisor. I do advise that you do your own research. This is what I found on this company. But there are also other metrics that other people use to analyze a company, like price to book, the enterprise value, price to sales. There are lots of things that you can use to analyze a company. You want to know the intrinsic value of a company. You want to do the discount cash flow. There's a lot of things you can use to analyze a company, and I do recommend you learn these things and you come up with your own strategy before you start investing. But that's another episode for Fail Safe Wealth. If you haven't already, please hit the subscribe button, hit the like button, leave a comment down below, and let's do it.